Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Nigro and I'm a partner in the Private Equity and M&A group at Stikeman, Elliott. For today's podcast, I'd like to welcome our special guest, Jonathan Sherman. Jonathan is a partner at Oaklins Canada. Jonathan, thank you for joining us and welcome.
It's my pleasure, Mario. Thanks for inviting me.
We always start our podcast by asking our guests to tell us a little bit about themselves and their own history. And then in your case, obviously telling us about Oaklins Canada and the work you do at Oaklins.
Happy to. Thanks again, Mario. I am, as you said, a partner at Oaklins Canada. Been with the firm since 2019. I've been in and around the M&A and financing world for over 25 years now in the Toronto market. Worked in private equity, in lending, advisory services, and now with Oaklins Canada and M&A advisory. And Oaklins Canada is mid-market M&A advisory firm with Canadian offices in Toronto and Montreal. We're part of a broader international framework, which is sort of the broader Oaklins platform. We have 60 offices in 40 countries around the world. Very strong in Europe, really have full coverage of the European market. We have a number of American, US-based partner firms as well, present in South America and several countries there, as well as in Asia and the Pacific Rim. And that's an important part of our practice. When we're working on the sell side, we work collaboratively with our global partners to bring international buyers to the table for our clients. And depending on the mandate that we have in other aspects of our practice, say on the buy side, we have the capability to look in other geographies globally for acquisition targets for our clients as well. Most of our practice is on the sell side, probably about 2/3 of it. The rest would be primarily buy side, and we do some capital advisory work as well.
Jonathan, Oaklins is an independent firm. We often don't see independent firms with such a kind of global reach or an ability to kind of use kind of global resources. Can I ask you, how does it work in practice? It's not something we're used to seeing for, at least for mid-market companies, but people can extend to partners, overseas or in other jurisdictions to help with a mandate. Can I ask you to tell us a little more about how it works? Because it's a unique feature, obviously something particular. I mean, obviously we see it for some accounting firms and all, but we don't see it for independents like yourself.
Happy to talk more about that, Mario. I appreciate you asking the question. It's a great question and kind of really goes to the core of who we are as a firm. So in terms of where the rubber really meets the road, I would say is that we are very connected with our partner firms in those 60 offices. And that is, I think, both through personal relationships, but also through technology. We have a very robust intranet platform that is very easy for all of us to use. And we have formal processes by which we can request that our member firms provide suggestions of buyers in their markets when any of the member firms are working on the sell side. And with respect to that, this is where we can really leverage those markets from the standpoint of our partners in each country having local knowledge, strong personal relationships that goes well sort of beyond knowledge or relationships with multinationals. It really extends into the middle market in terms of buyers as well, not just in terms of sellers. So they're able to bring family-owned firms, for example, in their markets, mid-market, acquisition-minded private companies to the table to acquire in Canada. And likewise, we can bring Canadian buyers to the table for targets in the UK, Europe, the United States, Asia, as I said, South America, et cetera. And the level of activity tends to depend on the sector, of course. Some sectors are sort of more scope, kind of international cross-border activity, but we always offer that up to our clients, and it's pretty seamless. And what really, I think, makes it all work well is the fact that we have well-defined guidelines internally in terms of fee sharing across firms. So everybody is sort of not wondering or questioning what's going to happen, how are they going to participate in the economics of a deal. There's always some details to hammer out, but it tends to be a pretty painless process with our partners. We have very good relationships, very cooperative, collegial relationships with our member firms, and has led to quite a few opportunities for us to work together for them and create better outcomes for our clients.
Can I ask you, you're obviously seeing, Jonathan, the interest of potential foreign buyers on these Canadian mid-market companies. Do you see a lot of interest when you take these mid-market companies to market and use the global network to try to, encourage foreign buyers? Do you see any patterns? Do you see anything in particular when you think about trying to sell a Canadian mid-market company to a foreign buyer? I'm just curious what you see out there when you try to put a mid-market Canadian company to the marketplace and the kind of feedback you get from your partners and from foreign buyers of what do they look for in a Canadian company? What attracts them to Canada? What are they seeing? Curious on the feedback.
Sure. Another great question, Mario. I would say it depends to some degree on whether they have presence in North America or not. And that can vary too between whether they have presence just in the US and not in Canada yet, or if they have presence in Canada already. And I think the less of a tie that they have with North America, or let's say with Canada, as we sort of work down this scale, the more attributes they're going to look for in terms of scale of the business. And by that, I mean the size of the business, of whether it's actually going to be a true platform in Canada or a platform for North America, or if it's an add-on to an existing operation that they have, and there's already an opportunity for integration. And I'd say that we see this actually quite a bit. We've done deals with European buyers, with Japanese buyers, for example, and what they often are looking for is a management team that'll stay in place for some transition period. That's typical in most deals, but probably I would say in a number of these, especially if they don't have a presence already in Canada, they're looking for a management team that'll stay a bit longer than might be typical. And then it's a decision for our clients. Does that fit with all the other things that they're looking for in a deal? Sometimes they're quite happy to have that be the case, and other times, and we're always trying to provide our clients with a range of options. We go out to, obviously, to Canadian buyers, American buyers, and international buyers. And so they all look at the world a little bit differently. And our clients always weigh sort of the overall value in the deal compared to structure, of course, but also compared to how long does that buyer want the management team to stay in place. And in a lot of cases, the management team is somewhat synonymous or partially synonymous with the owner of the business in the mid-market. So I think, if a business has some scale, it's in a strategic category for that buyer, and there's a management team that's very committed to the business and working for some period of time in the business, to the extent that foreign buyer has already made the decision that they want a presence in Canada for strategic reasons, they'll be looking for those additional attributes as well.
Jonathan, obviously with the kind of year we're having with these tariffs and all this kind of these macro forces, global economic order changing because of the US tariffs, are you noticing less interest in Canada? I mean, obviously people used to look at Canada as a kind of gateway in some ways to the US, or saw it as an opportunity for a foothold in North America. Are you seeing some of that? Or, obviously we have a lot of manufacturing that's been affected by it. I'm just curious what you're seeing on the ground when you think about the last 8 months with all of the tariffs out there and the implications it's having on potential global buyers, putting deals in the market, getting deals done.
Definitely have seen an impact. I think where we've seen the most skittishness is from US buyers with respect to the manufacturing sector. I would say, especially, those businesses that have had an impact, a direct impact from the tariffs, that have perhaps a significant US business. And then I think the third thing is there's three industries in particular that, when the dust settled to some degree and, the clouds parted as far as what is actually happening here, we saw that steel, aluminum, and auto were three sectors that were particularly impacted. I know there's been a new sort of announcement with respect to things like furniture, for example, but we're not sort of as active in some of those sectors that with respect to the recent announcements, but certainly with respect to the Ontario economy in particular, things like steel and auto exposure are very top of mind and impact a lot of businesses. So we've seen US buyers kind of back off to some degree in terms of businesses that were exposed in those areas or that were skewed to those areas. I think businesses that have, again, as we sort of seen this progress, and we've seen that businesses that can avail themselves of the protection of CUSMA don't have as much impact. Those types of businesses, probably are less impacted now. Initially, everybody was taking a pause in the spring, but I think as time has progressed, those businesses, I think there's still interest. I think US buyers are still looking at those opportunities. Europe, interestingly enough, I think is where the opportunities in terms of European buyers, where there are opportunities that fit with their strategy, they're still quite interested in Canada. We're seeing European buyers that are taking a close look at some of the prospects that we're showing them. I think if it's in one of the three sectors that I mentioned earlier, particularly metals and auto, some European buyers that we've talked to probably have shifted their focus more to the US away from Canada. But if it's, again, outside of those sectors, I think they're quite interested in Canadian opportunities.
Jonathan, are you finding that, obviously the manufacturing sector, the global supply chain has affected those kind of businesses you mentioned, particularly, in the steel, aluminum, and auto sectors, but overall, are you finding deal flow active? What's your sense now that we're kind of 6 months into this tariff world? What are you seeing out there on the ground in terms of the ability to get deals done, the interest of buyers? Who are these buyers? Are you seeing deals getting done in this market?
Well, I think since the tariffs, we had a few deals closed in the early part of the year before things became sort of much more concrete with respect to what tariffs were going to be implemented and where. And then we saw things slow down in the spring. We did have a couple of deals close over the last few months in the equipment rental segment, interestingly enough. We've been bringing deals to market in September. Now, it's sort of always a natural time to bring new opportunities to market after Labor Day. I think we're seeing an uptick in interest compared to, what we were seeing when we were trying to or contemplating bringing deals to market in the spring. I would say that most of our activity tends to be 2 to 20 million of EBITDA type size businesses. And we're probably skewed a bit more to the lower end currently. The clients that we're in touch with that are a bit on the larger end of the scale that we deal with are, I think, really being more cautious these days and thinking about timing. And, we're sort of right there with them and sort of trying to give our advice and feedback and monitoring the market as to when the right time would be. And those deals do tend to be strategic or quasi-strategic with respect to, and when I say quasi-strategic, I mean private equity-backed portfolio companies in the same sector. Whereas some of the smaller ones, there's sort of a broader universe of private investors, et cetera, that you would be very, very familiar with, that you know better than anyone, where there's kind of a good universe of buyers out there. They have money to deploy, and there's, I think, still a robust appetite with a high number of potentially interested buyers. I think the other thing that we're seeing is maybe a bit more activity than would be typical for us on the buy side. So clearly there's clients that would rather be buyers in the current market. If they sort of have a choice to make and they're not as close to selling, I think they are looking at acquiring. And that could be, I have sort of one pending engagement where we're not launching yet, but it's a Canadian firm that wants to buy in the United States. And also we have sort of a long track record of working with European firms, particularly European strategic firms or strategic acquirers that look to buy in Canada. And so that's also continuing, and maybe even to a greater degree these days. And then I think finally, we're probably doing a bit more capital advisory activity just because there's more friction in the market generally with everything that's going on. Put it in a nutshell, sell sides are for us right now probably, a bit on the smaller end of our range, sort of more volume of deals at the smaller end. The bigger guys are bigger clients are being a bit more cautious, waiting a bit, and doing a bit more in the way of buy side and capital advisory engagements.
Jonathan, I always ask our guests, I call it the crystal ball question, just kind of any trends you're seeing in the market, anything you're particularly noticing or you can see coming our way, in the end of 25, the beginning of 26, anything you got your mind to or you're seeing in the marketplace to keep all our minds to?
Well, I think there's probably a lot of pent-up supply. I think that's probably the biggest thing. And part of that, anytime there's a delay, we saw it during COVID, of course. We saw all these deals that were deferred from 2020 get pushed into 2021. I think now there's naturally going to be a number of deals that possibly could have closed during the course of or later in 2025 that we're going to see close in 2026. I think there'll be more deals, there'll be more engagements that'll come up that we would have signed by now, that we'll probably be signing late this year or sometime next year. I think all of this bodes well for higher volumes in 2026 than in 2025. And I think all the demographic stuff that everyone's talked about for a long time just continues apace. I mean, that is not abated. And you still have business owners that are thinking about succession planning and sort of what they want to do with their lives. And when things get delayed a bit, it gets even more pointed. I think at a certain point, they'll be thinking, okay, well, I really yeah, I delayed this a little bit, but I still have to do what I need to do for myself and my family. And I think that will also be a factor that feeds into increased volumes for next year.
Jonathan, I want to thank you for joining us, obviously telling us your story, telling us the work that Oaklins is doing in Canada. It was super interesting to hear about Oaklins and its international focus. Thank you for being a guest.
Thank you, Mario. Really appreciated the conversation and your time.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.